Hi everybody, this is Gary Dean, and this is our weekend video report for Sunday, May 30th, 2016. Obviously, you can hear that I lost my voice over the weekend, so I'm going to make this kind of quick. We continue to see this just low volume gravitating higher on a daily basis, but it really has not changed the overall view of things, because we're at levels where even if they break above this, we're still running into that 2035. That's going to be resistance. We're still going to have these overextended bearish divergences on the daily chart, and we're still going to have the 5 waves up. So there's a lot of reasons where even if we do head higher, not really to buy into it all that much. This was not enough for some kind of wave 2 down. So if it's not a wave 2 down, then it means it's a 4, and now we're coming up and making the 5. And then once the wave 5 does complete, if that is the case, then that's when we start looking for the anywhere from the 50 to the 78% retracement level from the highs. So again, it's just saying that no matter where we are right now, the larger point move should be to the downside, not the upside, and that's even if they take these highs out. Now, I'm still looking at this fractal pattern. Obviously, they're going to be they're not going to follow it exactly. We just look for similarities, and from there draw a conclusion. We had the bearish divergences with this in between the blue and the red. You can see we had the bearish divergences there. This was your quick drop and then quick rally up. So I had it labeled a little bit different, but it actually looks better, something like this. So it's still in play. Doesn't mean it has to play out. Absolutely not. What I am saying is that these bearish divergences and lack of any kind of pullback and absolutely zero volume that's been in this market, I really would not be trusting any kind of move that's up here. So moving on. On a 60-minute chart, again, you can see these divergences are just expanding and expanding. They did that in February, and we knew what took place from there is we had a quick drop. This really should be more of a drop than what should the next move down. And again, it could be just an ABC move, but it's still implying that the next move is coming someplace down into these levels there. Now, another thing is just the number of just open gaps that are below here. We've never really seen any any rally sustain when we have all these open gaps. Normally when they do this, when it does roll over, it goes down really fast and starts closing these gaps. So that's the risk of just jumping straight in right now, is that it rolls over and we head down to these levels here. If it heads higher, like I said, I still believe that the bigger move, even if we come up to these levels, is going to be to the downside, not the upside. So we have bearish divergences again, very overextended, and we are at our resistance. So if the if the bulls can push it through the 2101, then we're probably looking to move up to test these highs here. If they get through that, then they have the 2016 resistance. If they get through that, then they got to deal with the with the 2035 resistance. So there's a lot of hurdles that the bulls have to move through to be able to say that it's breaking out. And again, with the divergences and just no volume at all, I'd be taking this with a big grain of salt and just say, when it runs dry, we're going to see things move to the downside, and it's probably going to move in a very fast manner. So even on the 15-minute chart, you can see bearish divergences, bearish wedge. Really, I think the important part is going to be for the bears to put it through the 2085 level. If they do that, that's when probably all of this will be wiped out, and then we'll head down to those original targets. So with that, so I can try to save my voice, and hopefully I have some for tomorrow. Have a great, enjoy the rest of your weekend, and I'll talk to you guys on Tuesday.